All right, in the interest of time, I'm going to get things started. I'm sure people are going to trickle in, but I think we have all of our participants here. Super excited to welcome you all to today's demo day. We're going to hear 4 startups from the MENA region pitch to 4 investors based in the US. My name is Hani Azam. I'm the founder of Viaka. If this is the first time that you're hearing about Viaka, the Viaka network, basically what we're building is a home for the MENA region's global community that's building and investing in startups and generally working in cutting edge tech. Today, we're at over 800 members, and about 70% of those members are founders and investors. And this community does really stretch across the entire globe. We have folks even participating in today's event from Silicon Valley, the west coast of the US, to New York and Boston, to the UK, Paris, and of course, in the MENA region itself. Beyond virtual events like today's event, we also organize in-person mixers across the world. We host a vibrant Slack channel or Slack workspace. And generally, we strive to be the connective tissue between members of our community wherever they're based in the world. So as we kick off the event, we'll drop some links to apply for membership. We have a free tier, a basic tier, as well as a premium membership tier. So you can find those in the Zoom chat, and we'll also include them in an email as we follow up after the event. Before getting too far into things, I do want to just give a huge thank you and shout out to the organizations that are sponsoring today's event: Silicon Valley Bank, Taft Law, and Intersect. Beyond the great work that each of those organizations do in their respective fields, they've been exceptional partners to Viaka throughout this year and really throughout the history of this organization. And they make programming like today's event and others possible. I'm gonna give them each a chance to speak. I know Sarah's gonna be coming in a little bit late, so probably between pitches, we'll have her just talk a little bit about the work that SVB does. Next, I do want to bring Taft up. Abe, I know you were having some microphone issues, but any chance you are able to chime in here?
Yeah. If everybody could hear me, I guess it worked. Based on the look on your face, I think it worked. My name is Abe. I've been a huge supporter of Hani and Viaka for a little over a year now. I'm a partner at Taft. I work with venture capital funds and emerging growth stage companies, and I kind of head up the office here in Chicago. And part of the work that we're doing is building out our MENA practice, which is aimed to kind of bridge the gap between here and founders and funds here to opportunities abroad and vice versa. Most of my work on the fund side is everything from fund formation to financings, with my bread and butter being financings, and then same thing on the early company side. So if anybody has any questions or just wants to chat, feel free to reach out. Thanks, Hani.
Awesome. Thank you, Abe. And yeah, thanks for all the support over the past couple of years. The last sponsor is the Intersect Hub. I'm not sure that I see anyone on from there right now, but I'll give them a quick shout out for the amazing work they've been doing, especially over the past year, to help foster and build the resilient startup ecosystem in Palestine and for Palestinians across the region. And we'll be sure to include some information about what they've been doing both on the ground in Palestine as well as in places like Dubai and other parts of the Middle East as well. So with that, I want to just do a quick introduction of the investors that are joining us today. All 4 of them have built and backed amazing companies here in the US. So we're really fortunate to have them, share their insights and give feedback to the startups. Travis is a GP at Vinyl. Before that, he founded a company called Soon Spoon, which was acquired by Resi, and Resi later acquired by Amex. And Travis was also the chief customer officer at a travel tech startup called Freebird, which was acquired by Capital One. Riley is a principal at Valia Ventures. Before joining Valia, Riley was an associate at Arcturus Capital Partners and the founder of Crash Alert. Over the past 11 years, Riley has mentored hundreds of startups as a volunteer for things like the MIT Enterprise Forum, SCORE, and Mass Challenge. Naseem is a venture capital investor with over 20 years of experience. She has a strong focus on health tech, women's health, and financial services. And in the last 7 years alone, she's invested in over 30 pre-seed and seed stage companies led by ambitious female founders. And last but not least, Ramy is the founder of 1984 Ventures, a seed fund focused on AI, upending antiquated industries. Ramy was the founder of Snippet, acquired by Yahoo, and an early engineer at Tell Me, which was acquired by Microsoft. He started his investing career at Khosla Ventures, where he worked with Vinod Khosla on a number of investments, including historic successes like GroupMe and Square. Last slide of the intro, want to just tell you about the 4 founders that we're going to hear from today. In terms of format, each company is going to pitch for up to 10 minutes and then answer questions from investors for another 10 minutes. I'm going to be keeping time. And if you have questions and you're in the audience, please drop them in the chat. The founders or members of their team will be able to address those questions as we go. So in terms of the order, it's going left to right on your screen. Vaibhav is going to pitch wellxai. wellxai simplifies health insurance through prevention-focused, digital-first solutions that empower insurers and brokers to build sustainable portfolios. Next up is going to be Karim pitching uktob.ai, which enables organizations to deploy autonomous AI teammates that handle key business functions within minutes. Mustafa and Alankrit are going to be pitching omniful, which serves enterprise clients across retail, logistics, and e-commerce categories, offering an all-in-one modular alternative to legacy systems like Oracle, SAP, and Manhattan. And finally, Dunya is going to pitch Capifly, which is pioneering credit solutions for the venture ecosystem, unlocking non-dilutive, Sharia-compliant growth capital across the Middle East and North Africa. So super excited to kick things off. Vaibhav, I'm going to bring you up to the screen and spotlight you so you can share your deck and get started.
Perfect. Thank you so much. I am going to share my deck. Perfect. So thanks for the kind intro and lovely to be here. So at wellxai, we're building simple health insurance for a connected world. Typically, when you buy health insurance as an individual or as a member that's being insured, because it's a transactional sort of commoditized product, we experience, at least in the region, due to government mandates of health insurance being a regulatory requirement, there's very limited loyalty within the health insurance space. Customers move almost annually, and it becomes very difficult for insurers to keep a customer. You also only get value from an insurance product when something goes wrong. And therefore, it doesn't really add value on a day-to-day basis to a member's life. And the whole experience is quite archaic, and it's very difficult to buy, very difficult to manage, and there's very limited flexibility from an end user SME perspective in order to get the right kind of support they need from the insurance provider. To tackle this, we built a stack of solutions that bring together and simplify the whole experience of purchasing, consuming, and actually improving from being a part of health insurance. We have 3 products that come together within an ecosystem, starting with the wellxai app. So all the members, they get access to a single application that combines all insurance-related functionality, access to your information, being able to submit claims, getting your questions about your insurance answered, to digital health tools like telemedicine, online pharmacy, therapy, and then rewards for actually taking care of yourself. So we have challenges where people can participate. They get rewarded in X coins. They get rewarded for using digital health tools, which are lower cost, etc. Typically in our region, SMEs are the ones that are buying insurance, or companies are buying insurance for their employees. And so we made it super easy for HR to manage the insurance, do the onboarding of employees, and actually help in employee engagement. This helps them, A, not have to spend money on another solution that does that, but then B, it makes the product a lot stickier and a lot more exciting and delivers greater value. And the third piece is our broker platform. So in the market, at least in MENA, it's predominantly broker driven. People will always go to a broker to buy an insurance. And so we made the broker's life super easy using our broker tool in order to enable them to sell our products. At present, we work with 5 insurers in the UAE, and we are go-to-market through broker partners. And we have some sort of key clients like Emirates and Abu Dhabi Islamic Bank, etc. We've also secured our first partnership in Saudi Arabia with the 3rd largest insurer, and are sort of very excited to start our expansion into KSA. Compared to most other insurance products, our customer satisfaction rate is fantastic. We have stories of people losing 10 kilos by getting onto our insurance program because of the challenges and rewards. And so it just seems to be a far more exciting product than what you would typically buy within health insurance. And overall, as a business, it's worked really well. So we launched about 3 years ago. As of now, we have a $2 million run rate. And the first brand that we launched, in addition to our SaaS platform, has generated $1.2 million of revenue in the last year with $15 million of premium. In terms of business model, and I think that's important to address, we first started with a pure SaaS platform, which is the Wellbeing app that we brought to market. What we then realized is that our insurance partners weren't able to extract the right value from the platform because they were still selling a traditional old school insurance product combined with a funky new age well-being and prevention app. So we said, we realized that we need to control the entire value chain, and we started helping them build a brand and take the brand to market. What we then realized is when you actually control the whole thing, and the whole experience for the member, that's when you can drive real value. And that's how our first brand launched last year in October. And since now we've done $1.5 million in revenue. We've since then also launched a second brand for another insurance company. And all the insurers that were taking our SaaS solution have asked us to build and manage brands on their behalf. Typically, they face the challenge of not being able to allocate enough resources or have the skill set internally to launch a digital brand. So our business model shifted slightly to saying, we will come, build your brand, launch it, run it for you, and take a percentage of premium as our fees. So instead of us costing them money now, for example, Qatar Insurance Company is our first partner where we've launched a brand for them. We've already made them almost $1 million in revenue within the first year. We anticipate hitting $3 million of revenue by the end of this year, and then the goal is by hit north of $30 million by 2026. From a team perspective, I'm from an insurance background. My family's been in insurance since I was born. I've studied insurance in my undergrad, and I really do love the industry. But I believe that it doesn't deliver the value that it should, and so we're working very hard to change it. We brought a team of experts from tech, insurance, health, and well-being all together to deliver wellx to market. We closed a seed round last year, and earlier this year, in April, we hit profitability and became cash flow positive as well in June. And we closed a seed extension of $1.1 million in October this year so that we can fund our expansion into Saudi. Unit economics work great because we only go through brokers. So one of the main points is that our cost of customer acquisition is only $25, but we make $150 per member in year one. And at present, assuming an 80% customer retention, which is like what a good insurance company typically would get if they did a good job, not necessarily the average in the market, we expect to have a lifetime value of $750. And the next step, as I mentioned, you have a first customer in Saudi. We're setting up our company there. It's a $615,000 contract. And then from there, we're going to start scaling our presence there. So thank you.
Thanks so much, Valia. Well on time as well. So I'm just gonna take a second to pin the investors videos up on the screen alongside you, but Travis, Naseem, Ramy, Riley, feel free to like jump in right away and ask questions, share feedback, etc.
Yeah, happy to kick us off. Thanks for getting us started here, and congrats on all the progress so far. How should we think about market size in this space with the revenue per customer that you shared?
So market size, because we charge a percentage of premium for the brands we run, I would look at it as the size of the health insurance market, which within the GCC is $22 billion. And then, of course, we take a percentage. Right now, it's 7.5% of the trend of whatever we are generating. So, yeah, that's significantly large, I believe.
It sounds like there aren't other competitors for what you've built. And I'm qualifying a little bit because I'm not as familiar with how insurance works in the region. So I learned a lot. So thanks for that. It looks like it works similar to what our exchange does here in the States in terms of aggregating healthcare options for potentially employers and for users to navigate. Did I understand that correctly?
So we're not a sales channel.
Okay.
What we realized was, so 80% of the market is controlled by brokers. It's to acquire customers directly within insurance is really, really expensive because actually nobody really wants to buy insurance. And you need to spend a lot of money to make that happen, or you have to set up a little mom and pop shop or have 100 salespeople. What we realized was the insurers in the region are all competing with pretty much the same products with each other, and every year it's just a price race.
Okay.
And so to help them achieve a goal and to serve us in that process, we said, look, we've got a whole tech stack, which you, Mr. Insurer, don't necessarily want to invest in because you don't know what the results are going to be. We have it. So what we'll do is we'll build you a brand, use our tech stack. We'll bring you a reinsured product so you don't have to do anything.
Okay.
And we will do this on your behalf using your regulatory infrastructure. And then I'll pay you licensing fees for giving me your license. And now I have multiple products in the market, all focused on different segments, all going through market brokers on the same tech stack.
Okay. Okay. So you're saving the different insurance providers from having to build their own tech stack and giving them a lot more access to buyers in it's a much more efficient way for the product to get to market, right? Okay. Got it. And so are there any competitors doing what you're doing, or are you really first to market on this?
So globally, there are companies, I mean, all our brands are prevention focused, which means we sort of prioritize or incentivize people for taking care of their health, right? So there are large companies in other parts of the world that are focused on this model of selling insurance that is focused on prevention, ULife, Betterfly, Vitality in different markets. I have yet to see anybody do a business model of running a house of brands and enabling insurers to launch digital health insurance brands. So that's a unique twist, which I have yet to see.
Okay. Okay. That's great. One more question. The pricing model behind the scenes. So is it I know you went through business model, but is it an annual contract or service fee with those insurance providers, or is it are you getting a rev share? And are you playing with that still? Do you think there's other ways to do it?
So there's we make a percentage of the premium we generate.
Okay.
Every policy on every individual, whatever premium is, we take a percentage of that.
Okay.
And then we are also organizing the reinsurance in a lot of the cases. And so we work with the reinsurer, we create the product, we do all the innovation stuff, and then we just bring it all as a package to the insurance company. Over the long term, we will get a revenue share on the profitability of the insurance product itself from a claims perspective.
Okay. Okay. Okay, great. Thank you.
Thanks.
I have a quick question about velocity. So if my understanding is as you onboard customers, you have to do a little bit of work in helping them establish a brand. What does that timeline look like? And as you look at expanding throughout the region and kind of growing quickly, is that really the rate limiting step? I don't want to use the term agency here, but like, to what extent are you kind of manually setting up each brand where that might kind of be like a speed limit on how quickly you could scale the business?
Yeah. So I think I would look at velocity from two perspectives. One is, yes, onboarding an insurance company. On average, for the three insurers, two insurance brands alive, third in progress, 4 months from getting all the contracts to branding, all that kind of stuff done. But from a growth velocity perspective, the insurance products themselves are growing, right? And then you hit year one, then you have renewals, and you're doing new business. You hit year two, you have renewals, you're doing new business. And so each book of business is growing while you're setting up new books of business. So this compounds very, 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 like over time, it compounds really, really well. Because if we're focusing on every product on intention as well, the experience is unified and great across all the products, beating everybody else in the market. So at some point, anybody looking for a quote, no matter what kind of segment you're looking at, you'll get a WellX powered brand that is better than everything else that's available, and then that can scale. And that also saves us from a risk perspective, because, for example, people in Abu Dhabi will only want to buy from an Abu Dhabi insurer. Maybe one of your fronting partners has some change of heart or some financial issues, whatever. So we diversify significantly, both from a licensing perspective with our insurance partners, and then we also diversify from a reinsurer perspective, because global things change, reinsurance capacity might leave. So we've sort of de-risked a lot of those elements by working with multiple insurers and multiple brands.
And then can you remind me I know you're early, so it's more of an expected number than a current number, but what's the expected AOV, like what's your average take in whatever currency you want to use, once you bring on one of these brands? Like, what can you expect that to spit off in the future if there is an upfront lift? If it's kind of ongoing, it sounds like churn, the expectation is churn would be phenomenally low. Then, it may be worth it if you're pulling tons of money off of them. What does that look like?
Yeah. So it depends on segment. So we would look at premium volume being generated by the product, right? So SME will generate more than individual insurance. So we have one individual product out, we have one SME product out. So year one, first product, we did $15 million of premium, right? And we took 7.5%, 8% actually on average on that. On the individual product, we would expect to do anywhere from $6 to $7 million in year one. Then we're going to launch another SME product in a slightly different segment, maybe a lower market, because we have a premium product out. We have a lower market. We expect to do higher volumes on that. But so I think it's a function of the insurance product itself. The upfront investment and the unit economics associated with it are so low, mostly because our go-to-market is only through brokers. So I need 2 or 3 people going back to the same brokers, just dealing with them. The tools take care of all the sales process. And so it's really, really, that's why we're profitable, right? That's why we hit profitability. Now we're just investing to expand to Saudi because the unit economics work really well.
But I'm trying to, first, it's awesome. This is one of those companies where, it takes a very seasoned person in the industry to start, which is what's really cool about what you're doing. It also candidly makes it a little bit more challenging for the average investor to get it. We do a lot of healthcare, but mainly in the US, not in the region. I'm trying to wrap my head. You are selling through brokers, but there is a broker component. There's an HR person portal. There's an app for consumer. Candidly, it's hard for me to wrap my head around what is the value proposition. So are you able to just like in one sentence tell me, like when you're selling to a broker, what are they buying? I mean, obviously software, but like what benefit is the broker getting?
Yeah. Great question, right? So health insurance is mandated in the region, right? So every company has to buy health insurance for their employees. That's standard. So a broker, starting with that part of the value chain, wants to provide the best health insurance product and get paid the highest commission that they can, right? So the broker doesn't pay me anything. We don't pay the broker gets a commission for everything that they place with us, for every policy of ours that they sell, right? Now, the broker is incentivized to make their life as easy as possible. So we give them a tool that makes their life as easy as possible to sell our product. And that's all they want, because they want to spend the least amount of time to get a sale done, as long as the client is happy. So that's the problem we solve for the broker. Then we're going to the HR. Now, HR wants the best value for money for the insurance. They're getting a great insurance product, which we've created with reinsurers. But what they're also getting is a comprehensive platform to manage the health and well-being of their staff, and a simple way of managing insurance that is not sending emails and going to meet the broker to manage anything, to add and delete employees, etc. So we take care of that part. So it's super easy and simple for the HR to use. And for the end member, they're getting a health insurance that doesn't require them to download 3 different apps if they want to talk to a doctor or they want to manage a claim. There's like 3 or 4 different apps they typically would have to download. They get a singular platform where they can do everything related with their insurance, but then also they get rewarded for taking care of their health. So they can earn up to $250 a year back in rewards for being healthy, for walking steps and sleeping and talking to the doctor online and seeing a therapist, all these things that we want to promote as a proactive health insurer or health insurance brand that helps people take care of their health. So everybody wins in this process, including the insurance company, because they don't pay anything upfront. We take that risk on ourselves, but we do significant amounts of analysis on whether the insurance product will sell, won't sell, if the pricing is right. And we work with the reinsurers on that to make sure that it's something that when it goes to market, all the basics of what a good insurance product is being met. And then we add all our tech on top to make the experience significantly better.
Thank you.
All right, awesome. I think we're gonna cut it there for now. Vaibhav, thank you so much.
Thank you.
Really love the pitch and great job. Thank you, investors. In a moment, I'm gonna bring Karim up to pitch uktob.ai. But first, I wanna just have Sarah Rona from SVB jump in for a second and tell us a little bit about SVB's work, particularly as it pertains to the MENA region.
Thanks, Hani. Hi, everyone. Really great to see you. See a lot of companies that I've been tracking, so it's great. Also, a huge thank you to Viaka Network. Hani is an amazing resource. So for those of you that I don't know, my name is Sarah Rona. I'm based in New York. I cover our UK, Europe, Middle East, North Africa, and Australia, New Zealand market for SVB. So I specifically work with founders as well as VCs that are physically expanding into the US or raising from US investors. Helping with everything as it pertains to obviously their banking accounts, FX, wires, etc. But we go a little bit further in the sense that we really try to create a community to help founders. So we connect them with law firms, accounting firms. We try to make investor introductions when relevant. The goal is really to help sort of be that bridge for a lot of our founders who are still abroad. So it's really, really great to connect. If I could be a resource in any way, please feel free to ping me on LinkedIn or to send an email. I think Hani will share some contact information afterwards as well. But happy to sort of chat with you through your go-to-market strategies or how I can be a resource. I'm also very biased for the MENA region for personal reasons because I'm half Afghan and I used to live in Dubai as well. So any opportunity to get back to either Riyadh or UAE or I even go to Egypt, which I haven't been yet. I would love to take you guys up on that. So if there's any events or anything, feel free to send me an invite and we'll see if I can swing it. But thank you again. And yeah, happy to be a resource for you guys. Thanks, Hani.
Thank you, Sarah. All right, Karim, I will bring you up now and feel free to share your screen and get started.
Awesome. Thank you for having me. It's a great pleasure to be here. I'm going to kick off. All right. So a bit of background on us as a team. So my name is Ramy Adeeb, founder and CEO of uktob.ai. I've been coding for 19 years and working on generative AI for the last 8 years. I studied in London, England, and moved to Canada. And there in Waterloo, I won a competition with NASA and started my first company, Cerebian, which started as a dream recorder, as a device that you wear during sleep. And when you wake up, you can watch a video of exactly what you dreamt about, exactly how you saw it. Proof that works. That was generative AI from brain signals. If you're familiar with the AI models today, you give them text as a prompt and they generate an image or a video. So exactly the same technology, but giving brain signals and generating videos from that. Actually, Facebook's latest research on the topic. On the left side of the screen is the image that the person was looking at, and on the right side is the image reconstructed from their brain signals. This is one of the things that I patented 7 years ago. After that, I built a device that you wear that lets you talk to other people or Siri or Alexa without actually talking, using your intention to speak, and worked on detecting emotions from brain signals. And today, my patents have been cited against companies like Sony, Meta, and others. So if you want to build anything that has to do with generative AI and brain signals, you're most likely going to have to go through my patents. And Sony and Meta's patents, where most of their claims were rejected. After Cerebian, I joined Plug and Play. I was leading the ventures team for Middle East, so investing in startups out of the VC fund, and also designing and managing accelerator programs. If you're familiar with the MISC Accelerator in Saudi, it's one of the programs that I designed and managed. And after Plug and Play, most recently, I started this company, Uktob, with my co-founder, Emad, who's also my brother. And Emad brings over 8 years of hands-on software development leadership experience. He ran his own software development company before Uktob. So he's delivered hundreds of projects to brands and startups across the MENA region. And together, the first thing that we built is a generative AI platform and a personal assistant for consumers. This was a B2C product that grew to over 400,000 users, over 100,000 monthly active users, and over 50,000 weekly active users. And although we had phenomenal traction with this product, we decided to pivot and focus on a product that is more aligned with our long-term vision. I'm sure as VCs, you're very well aware and familiar with AI agents. I'm just going to cover it for everyone's sake here. We've had two waves in AI. We had predictive AI and then generative AI, and now we're on the cusp of the third wave, AI agents. So this is where AI is evolving from narrow tools to autonomous agents that can accomplish complex end-to-end tasks that typically humans perform, and doing that on our behalf. And we are bringing AI agents to the MENA region. And so the product that we built enables businesses or organizations to deploy what we call autonomous AI teammates within a few minutes. And the first teammate that we've released is Raya. And Raya fully automates customer support across all channels. She can respond to phone calls, emails, and chat in an ultra-realistic way in over 50 languages, with specialized and outperforming anyone in all Arabic dialects. And we're expanding horizontally to include other job functions over the next 10 months. And so how does it work? Under the hood, Raya is made up of a team of AI agents that work together and collaborate. We have a manager agent that delegates tasks and assigns them to a team that can fully manage an inbox, chat with customers, make phone calls, inbound and outbound. And we also built what we call a browser agent, which is an AI that can operate a browser like Google Chrome to accomplish tasks across the internet exactly as humans do. If you saw Anthropic's latest demo that they released a day ago, we did this a year ago. And so all of these AI agents together, they compose one teammate. And you interact with Raya exactly as you talk to a human on your team. You can ask, how many phone calls have you had this week? What are the top issues our customers are facing? As you can see on the right side of the screen, she's having phone calls, chatting with customers, booking meetings for team members, and inserting information into the CRM. I have a demo here. I'll come back to it shortly. But obviously, the problem that this AI teammate solves is that customer support sucks, and it doesn't have to be that way. We have all waited 40 minutes on hold. Our AI teammates are instant, personalized, available 24/7, and can take action on software exactly as humans do. More importantly, they're 95% cheaper, 45 times faster with superior results. We have enterprise-grade security, advanced analytics, and we have over 30 integrations. Just in the last month, we've integrated with Salesforce, HubSpot, Google Drive, Freshdesk, Slack, Dropbox, and a number of others. And we ran a number of pilots successfully, like Dubai airports, Dubai courts, Dubai Sports Council. We also did a separate project with the Office of the Minister of AI in the UAE and Dubai Future Foundation. On the right side of the screen, I have an example here, which some of you are familiar with from Klarna. Klarna automated the job of 700 full-time human agents using only chat. We cover all channels, and we enable any business to do this within just a few minutes. I'm going to run our demo here. I know not everyone here speaks Arabic, but for the ones that do, they can kind of verify how awesome this is. I'll show it only for 15 seconds. Yeah.
الله يعافيك. كيف أقدر أخدمك اليوم؟
حابب أعمل حجز. Actually, sorry, when I shared my screen, I don't think I shared the sound. I can do it in the Q&A. But aside from these pilots, we've also, like, one of the projects that we completed is the world's biggest prompt engineering championship. So the Crown Prince of Dubai, Sheikh Hamdan, wanted to implement this. Due to our relationships with the government, they have asked us to do it, and we did. It was a high-profile event in Dubai, happened, and Emirates Towers and Museum of the Future was attended by the Crown Prince, by his sister Sheikh Latifa, by the Minister of AI, and a number of others. Happy to touch more on it in more detail. When it comes to the market, for the first time ever, AI can now create, it can reason, and it can interact, which means that it can effectively emulate humans. The market today for SaaS is $650 billion, but the market for services is in the tens of trillions of dollars. And these two markets are merging. So the new global TAM for AI teammates is in the trillions of dollars. This is another way of looking at the market that's more regional. Happy to touch more on it on more detail. I can circle back to it in the Q&A. Some of the things that differentiate us today is we built our own multi-agent architecture internally. We automated the process of onboarding customers through a self-serve platform. This will enable us to scale really quickly. And we have massive proprietary data sets in all Arabic dialects that we can fine-tune a model on, even in Moroccan, which is, as you know, the Moroccan slang is a mixture of Arabic and French. So in all Arabic dialects, we have this data. We have a unique large language model infrastructure. And most importantly, we are not a customer service tool. We are an AI workforce provider. We believe that every business in the world will hire AI teammates, and we want them to come to us in order to do that. And we have superb dialectal performance in all Arabic dialects. And some of the ways that we build moats over time is through the data flywheel. The more data we collect for every job function, it means that our models will perform better in that job function. And by hyper-personalization. So when we onboard a business and they start using our product, our Raya, for example, gets better over time. So it has a very high retention and high cost of switching. If one of our customers wants to switch to another provider, it becomes very difficult for them because they have to train it all over from scratch. We have a first mover advantage. We are the first and only company in the MENA region that we're aware of that's building AI teammates. Happy to touch more on these things as well. And some of our partners, we have amazing partners and investors. We're partnered with Dubai Center for AI, Dubai Future Foundation, Hamad Brajid Innovation Fund. We were selected as one of the Future 100 companies by the Ministry of Economy in the UAE. And some of our investors include the Hustle Fund in the Bay Area, Beyond Capital, which is a fund of funds in the MENA region, Gotcheck Ventures, and Access Bridge Ventures. And right now we're raising a funding round, and actually in full transparency, and since the time I've talked to Hani until now, we've actually fully committed and are closing our round as we speak. We're just signing the documents this week. We previously raised 250K. We extended it to another up to a total of 1 million. And that's what we're closing this week. And most likely we will close the final amount at double the amount at $2 million. But we're always in the market and looking for great partners. So if any of you are interested, we would love to chat more. That's it. I'd love to answer your questions. Thank you.
Thanks so much, Karim. I will say you could send the link to the demo after. I was getting the sound successfully, so
nice. Okay.
It sounded good. But yeah, feel free to drop that in the chat so we can check it out. I definitely want to see it, just out of personal interest.
Absolutely. Will do.
All right.
Yeah, I'd love to see too.
Yeah. All right. I'll bring the investors up, but just like last time, guys, feel free to just start firing questions away.
That was Karim, that was really great. It's so interesting to see, how far AI has come, and the real application of it in a team environment is really compelling. I'm curious to hear a little bit more on kind of the training model and how does it ramp up? How long does it take? How do you manage for it really learning well? And of course, bias is always a question when it comes to the training models. And walk us through a little bit just behind the scenes how that works and how you're keeping it kind of as smart and inclusive as possible.
Absolutely. Absolutely. We love that. Thank you, Naseem, for your kind note. So we built our own LLM router. So basically this looks at every single request that comes from, or every single prompt or request that comes from an end user and decides which large language model should handle it. As you know, today, AI models are commoditized. It's not like how it was 5 years ago. Even OpenAI themselves, they don't really have moats on their own models. 1 week, OpenAI is ahead. Another week, Anthropic is ahead, Llama, and so on and so forth. So this allows us to always stay ahead by having the latest and greatest models within our infrastructure. At any time, we can swap in a new model. And also because of the massive proprietary data sets that we've collected, this allows us to also fine tune a model for any specific task, or most importantly, for any specific Arabic dialect. So to answer your question, this infrastructure that we have allows us to serve our end users at a lower cost, lower latency, and higher performance. And that's really what we've been doing with the models. And we're always keeping ahead. Whenever there's something new, we can incorporate into our infrastructure. I hope I answered your question. If not, let me know. Happy to touch on it in more detail.
Yeah, no, it absolutely does. I think it sounds like, and small models are more effective in so many ways versus large models. And so I was just curious, just how does it look, and I'm gonna project a little bit my own understanding of dynamics, because I do come from also an Arab background, but the way men and women interact, the way women and women interact, the way men and men interact, like there's different nuances in those things. And so I'm curious how that gets managed so that it doesn't necessarily perpetuate bad behavior, but accelerates good behavior, right?
Understood. No, that's a great question. Honestly, it's a very difficult task for everyone. I think that everyone that's working in AI is a very difficult task. I think over time we'll mitigate bias more and more. But I think like with everything that we've done with testing, I'll send you the demo also like after the call for you to check it out and also to watch it. But I think like it's a problem. It's a global problem to solve. It's not just for our company.
Yeah, absolutely.
It's definitely top of mind. We keep it in all our interactions because when we give it to customers, we need to make sure that it adheres according to our standards. But yeah, it's a global challenge. I think it's more and more it's being mitigated, but I think AI models will always have at least some level of bias because at the end of the day it's been trained by
inevitable, right? But it's just have to navigate it.
But yeah, that's my thoughts on it. And how fast we can onboard a customer. We can onboard the customer literally within less than 10 minutes. We've done a lot of work to automate this process, and finally we've announced our product recently, and now we're onboarding customers, and we're doing a number of POCs right now. It's super fast.
Okay, no, that's great. They're really interesting. I'm also good friends with the team at Hustle Fund, so I'm glad they're on board with you. Yeah,
amazing. Yeah, we love the team at Hustle Fund. Thank you.
Yeah, they're great.
Kareem, this is super awesome. It's exciting just to know that there's such talent working on AI back in our part of the world. A couple of questions. One, your approach is to build AI agents, right? Like that mimics effectively human, as opposed to say use AI to automate customer success or use AI in general without necessarily the notion of an agent, but rather like that mimics a human. Just would love to understand a little bit why you took that path. Does that help you sell to enterprises better? Just would love to just get understand that piece a little bit more.
Absolutely. No, definitely. It's a great question. Look, the way we look at it, Ramy, is like we look at agents as not an end product, as a building block. And so we package these agents together in order to build an AI teammate. We know that effectively the use case that we're targeting is that we look a couple of years into the future. We believe every single business in the world is going to hire these AI teammates. It's inevitable that they're going to work on your team exactly as a human does. And I think even talent agencies and recruitment companies are going to start doing hybrid work, like hiring when an enterprise comes to them to do resource planning, they're going to hire a mix of AI and humans to take on some of these roles. So that's the reason why we packaged it this way. I think a lot of people are now, at least in the US, in the MENA region, not a lot of people are talking about AI agents. Not a lot of people get it, but at least in the US, a lot of people are working on this, and they're purely working on AI agents. And we see this as a building block. All of these agents together, they compose one teammate. And when they work together, in the framework that we've built internally, when they work together, they achieve the work that a human typically does. And so we believe this is a great way to position ourselves in the market. And that's why we went for it.
Got it. And then in terms of the focus, like obviously there's customer success, there's sales, there's all these areas. Obviously in the US, different market, but we're seeing a much more vertical focus for startups as opposed to abroad. Is your plan, I mean, you're starting at the right one, right? You're starting at customer success, but is the plan here to just own customer success in Arabic or become more of a sort of a generic platform, AI enabler with the best models in Arabic to then empower the custom applications?
Great question. I love it. And that's actually something that we've been going through recently. So number one is we started with Raya, our first AI teammate, which fully automates customer support. But since we've released Raya, we've been expanding the features of Raya vertically in order to dominate that vertical fully for customer service. And so since for example, in the last month, typically, like we built Raya as the frontline support, as like she handles 80% of inquiries and then escalates to humans when she's unable to answer, and then learns and gets better the more tickets are resolved. But now in the last month, Also, we've added the functionality for human agents on our platform. So when Raya escalates to a human, it happens on our platform as well. So that's the whole point, is that when you use our product, you don't need any other customer service solution. And it's a great question that you put out, because like that's our first teammate. And then we're super focused. We're making sure that Raya fully resonates with our customers. But also when we expand to the next job function, like, I don't know if you're familiar, in the Bay Area, Mayfield Fund, they recently announced $100 million just to invest in AI teammates. And their CMO recently he posted a post on LinkedIn. He said, like, there's the market for AI teammates in marketing is like wide open. And he said it's going to take 12 to 24 months for it to really start to proliferate. In early 2025, we're going to release our marketing teammate. So we believe it's going to have a massive impact. And yeah, this is our positioning in the market. Yeah. Thank you, Ramy.
Hey, Kareem, thanks for running through that. Super impressive background. And a lot of people are now saying they've been in AI for a while because it's convenient, but it seems like you actually have. So it's awesome to hear about your background. My question is more an extension of Ramy's point, just to share what we're seeing a lot in the US. We're seeing people go very vertically focused, even within customer success, around a particular sector. And so people are building AI agents to handle customer success for specifically healthcare use cases, or specifically financial use cases, really more of a sector-focused approach to go even further within customer success. So I guess more broadly, I'm curious to hear your perspective on building a horizontal customer success agent in the region versus some of the more industry-focused ones who might have a better understanding of some of the language, some of the terminology. And if you think the trend in the Middle Eastern region will follow the trend that we're seeing in the US with some of these more sector-focused companies.
Love it. Thank you, Riley, for your kind note. It's a great question. No, absolutely agree with you. Look, I think right now we're targeting within e-commerce and SaaS. That's like our first initial markets. As you noted, like this is applicable across every single industry, like virtually every single industry. Every business in the world has customers and you have to serve them. But we built it in a way that's kind of like shared across all of these sectors, at least for e-commerce and SaaS. Now we have Shopify integration, we have WooCommerce, we have a number of others coming up. And for SaaS companies, we're now piloting with a number of SaaS companies, and they see like it's the infrastructure that we've built is shared amongst all of them. So I think it will make some differences. Like if we were to go into healthcare, we would have to build healthcare specific integrations. As it stands today, when we look at the market in the MENA region, not a lot, like we're the only provider right now in the MENA region. So this allows us to have a broader set within our scope and serve as many people as we can. If we have to specialize and build more integrations for certain sectors, we'll do that over time. But no, I fully get it. I agree that it has and our goal from Raya is to dominate the entire vertical of customer service. Might not scale to every single sector out there because, like, for example, for healthcare, you need specific integrations that, but we'll do them. Like our goal is to the way we built our culture internally and the way we think is our number one feature as a team is to speed of execution and iterating really fast. So we're talking to customers all of the time and we're iterating on that. If we feel like we need to build specific integrations for a certain sector, we'll do that. But right now, as we look at the market, it's ripe for the taking. And we really believe that as we expand, look, if I was in the US building this, I would focus on a specific sector and a specific type of AI teammate. But given that we're in the MENA region and the competition, the demand is much higher than the supply, this is a massive opportunity. And we would definitely love to, and that's what we're doing, build more than one AI teammate.
Makes sense. Thank you.
Thank you.
Travis, did you want to drop a question in?
No, I have no questions. You're clearly a fucking pro. Like I think somebody made the point that a lot of people are like, bro, I've been in AI for like a decade, and you go on their LinkedIn, and it's like, no, you haven't. You clearly have been. I was texting Hanny during your demo that the dream thing seems fake. I thought we were like 10 years away from that. So that's pretty awesome. I guess like the only commentary, so Hanny and I worked together in a travel company that was basically automated customer service at scale for credit cards and airlines. It was before AI though, so it was like a little bit more naive. It's mostly kind of decision tree type shit. And so in the US, I've looked at a lot, and my fund invests in commerce enablement. So I've looked at a lot of like, we do customer service automation for Shopify. And seems like a lot of these companies raise a ton of money because it's like an easy use case for like kind of like a midwit VC to wrap their head around for AI, right? Like, oh, customer service, like people get it. But where a lot of these companies are struggling right now is like companies just don't really care about customer service. And like if they did, they'd be the few verticals that have massive customer service teams, which tend to be healthcare, credit cards, airlines, the federal government. And those plays require like enterprise grade integrations, and they're going to probably do it themselves. And so like the struggle I've seen is like you can call 10,000 Shopify merchants up to $1 billion in revenue each. And they're like, yeah, bro, I don't know, man. I have like 5 guys in, pick Asian country who like handle it's like not that complex. Like, I don't know, the shirt doesn't fit. And they say like, send a shirt back, whatever, dude. I don't care. And so this isn't very helpful because I have no, like, here's the answer. I'm just like very curious to see where, VCs are putting like billions of dollars into trash cans and lighting them on fire right now for AI. Like what vertical, because the AI thing is the AI customer service is like so obvious. Where is that really going to hit? Because so far with Shopify, at least in the US, and like there's massive cultural differences around hospitality between regions, but like in the US, it's kind of been like hitting this wall of everyone's like, I can just outsource this for like, and like they don't have any data to train it on because they're kind of dog shit at customer service anyway. So like they have no book for your system to like read and figure out. I don't know. If you have thoughts on that, I'd be curious because clearly you thought about this like a million times longer than I have. And I've just been like kind of disappointed with how customers in the US they haven't had much success in this space.
Definitely. No, definitely. I have a lot of thoughts on it. Like you said, like it's what we're doing. So we live, breathe, and eat breakfast, customer service, AI customer service. And the way we built, right? Look, I'll remind you, when it was the last time you tried to get in contact with a customer service and you waited 40 minutes on hold. This literally happened with me a few weeks
ago. Horrible. It's horrible.
Egypt Air, 45 minutes on hold. So these companies can say they're outsourcing their customers. And by the way, I spoke to a lot of founders and scale-ups, and the number one complaint is they hate outsourcing their customer service to call centers. They hate these guys. So some of the founders that I've been speaking to are like, you're gonna relieve us from these call centers. Like, please, let's do this. Let's try this out. So when you have a solution that kind of like you can plug and play it right out of the box, and it fully automates your customer support at an ultra realistic way, because it's at the end of the day, it's the unfulfilled promise that people were saying 6 years ago when IVRs came out, when banks started putting out chatbots that worked on decision trees. And let's be honest, like they sucked because you had to program the decision tree. If the user says this, you answer like, but no, what we deliver is ultra realistic. It's like a human. I'm a bit hesitant to say it, but it outperforms humans. And so that's the good thing about it. And AI models are improving by at least 10x every year for the last 10 years. So in 5 years, they're going to be 100,000 times better than they are today. So how good are they going to be at customer service? So our goal right now is just to capture as much market share as possible, and because the AI models will keep on improving over time, and then the value is just going to keep on increasing over time for every one of our customers that we onboard. So I completely get what you're saying, and I agree with you. I think the methods and approaches of the past were unfulfilled promises, but with this wave of AI, it's time for this kind of technology to really hit the market and proliferate.
Well, I'll say you're the first person who's had that understanding of the arc of history around how chatbots were the great redeemer for customer service and then ended up being just a horrible step backwards, particularly for high stress environments where they were rolled out, airlines, banks, things like that. So like of the, I don't know, dude, 24 US CX automation, like you clearly are the OG at doing it. So like I'm very excited to watch you hopefully dominate everyone else here who's just kind of spinning their wheels.
I appreciate you, man. It really means a lot. Thank you.
Thank you. Thanks so much, Karim. Really excited about what you're building. And like Ramy said, excited about also kind of what it represents specifically for MENA. Awesome, man. And send the demo link. I think we're all interested in seeing it.
I would, for sure. I appreciate you. Thank you, Hani.
Thank you, Karim. All right, Mustafa and Alankrit, I'll bring you guys up. I'm not sure if you're both planning on pitching, but I'll bring you guys both up and you can figure out what works best for you.
Yeah, so I'll be doing the pitch basically, and we'll both answer the Q&A.
Okay, perfect. Then yeah, go for it. Kick us off, Mustafa.
Please let me know if you can see the screen.
Yep, can see it.
Awesome. Thank you so much, and I'm really thrilled to introduce you to Omniful, the operational excellence platform for retail, commerce, and logistics. We are backed by some incredible investors, and today I'm here to show you why Omniful is not just another SaaS startup, but in fact, we've seen it as a once-in-a-lifetime game-changing opportunity from an unexpected region. So every business, especially in retail, commerce, and logistics, needs an operating system that doesn't slow them down. And the pain points that businesses face today are substantial, from complex inventory management to inefficient order processing and very high operational costs. And we've seen globally, mid to enterprise companies are spending an average of $150,000 annually on systems that are not only hard to use, but fail to meet the needs of fast-moving competitive landscapes. Prior to Omniful, these businesses had one of three options. One, use a traditional ERP system and have a customization done by an implementation partner. And two, use multiple single-point solutions from different vendors, stitch them together via middlewares or integration. Or three, build an in-house tech capability to build exactly what the company needs at the moment and figure out things later to iterate. So for the first one, with legacy systems, these providers basically provide basic functionalities out of the box that require massive customizations, since they have failed to address the complexity and scale required in today's fast-paced omni-channel environment for retailers. And these systems require deep technical knowledge to be able to customize and implement, which basically results in bringing in an implementation partner who has mediocre level consultants to build a critical mission software for a business on top of a rigid, hard to use, clunky, slow, and unscalable software. And then the second option, which is dealing with multiple single point solutions, you're dealing with separate vendors with mostly overlapping features, expensive middlewares, high integration risks, and overall distracted operations team, because you will have to use different dashboards all the time for basic workflows. And we've seen vendor consolidation already happening everywhere. And the last one, building in-house only, it really made sense for tech-first companies like, let's say, Amazon or Zomato or Tata 1MG. But it definitely does not make sense for a mid-market or an enterprise retailer to invest millions of dollars to build a technology company within their organization in order just to get proper scalable tech. And especially these efforts are generally going to result in failure because of the bureaucracy, the conflict of interest between internal stakeholders, what to build, when to build it. And if you do it in-house, you will most likely be building for yesterday's problems, not for today's opportunity, for tomorrow's opportunities. So basically, our platform is not only replacing legacy systems, multiple single point solutions, and eliminates the need to build in-house, but also it enhances the operational efficiency within a unified platform. Omniful solves this problem by providing an end-to-end modular AI-powered platform that unifies everything operations and supply chain. This not only addresses operational inefficiencies, but really unlocks many new opportunities for scale and growth. So we're building this platform that covers everything that companies in retail, commerce, and logistics would need, from the point of demand forecasting till managing orders, sales, shipping, returns, and everything in between. Basically replacing the entire post-checkout operations and supply chain technology stack for them. And we've seen companies, we have around 50 incredible companies that have made this shift to Omniful across retail, e-commerce, and third-party logistics companies from 15 countries, all within this year alone. So these businesses are not just adopting our platform, they're actually replacing legacy systems or single point solutions that can no longer keep up with their needs. And the market we're addressing is actually enormous. So we've done a very conservative analysis that just dives into the TAM based on ERP, logistics, and POS spend from retailers and only retailers. And this comes up as a $39 million globally on an annual basis. And only in the MENA region, there is around $3 billion of that is available. And we see a clear path to capturing a significant market share where we aim to reach in 3 to 5 years, around 100 million ARR by taking share from incumbents that can no longer adapt to this new landscape. And this is very similar to what Rippling is doing today for HR and IT. We're doing it for operations and supply chain. So omniful is moving very fast. We came out of stealth last December 2023. And in just a few months, we've reached 1 million booked ARR with zero marketing and no sales team. Just founder-led growth, and our average revenue per customer is around $2,000 per month. We have 100% retention on monthly contracts. Our product is sticky, valuable, and essential to our customers on daily operations. And that growth isn't just about customer acquisition or new logos. It's really about validation. And we've grown so much in under 1 year that in September, last month alone, we had processed more than 267,000 orders, valued at more than $32.9 million in just 1 month. The daily active users ratio is 96%, which shows how critical the software is in the customer's everyday operation. So the typical question that would come, what's stopping other competitors from entering this space? And every SaaS company today is really facing an existential crisis if they remain as a single point solution. So everyone will want to potentially build a hyper-functional platform or what is now so-called as a compound software business. And we believe the barrier of entry, especially in our space, in the operations and supply chain, is purely tech. And we have assembled a top-tier tech team of senior engineers coming from Amazon, Zomato, Tata 1MG, and others. Folks that actually built similar systems at massive scale, not still trying to figure out how these things should or should not work. And in just 19 months, we've built and launched a comprehensive platform that is basically 4 companies into one. And we're not stopping here. And a big reason of why we are uniquely positioned to do so starts with us as founders. My co-founder, Alan Nishad, who has led tech at unicorns like Zomato and 1MG, and myself, coming from an operational experience, scaling and operating multiple e-commerce ventures, each of us bring more than 15 years of relevant experience, both operationally and technology. And that is very rare to find it combined in such a way. And now let's talk about the resources we are allocating towards tech, growth, and AI. We are targeting to reach 10 million ARR by the end of 2025, which sets us with a momentum for the next milestone of 100 million ARR, and establishing omniful as a true and dominant leader in this space. So why now? And I believe it's very clear that it's no longer a debate whether legacy systems are dying or not. It's happening and started to happen. And similarly, it has become also apparent for everyone that SaaS as a single point solution is no longer to be valid. And everyone is going to become some sort of a hyper-functional platform. And this gets us to a conclusion that in the near future, let's say 5 to 10 years from now, there is going to be a new company that emerges as a leader of operations and supply chain software globally, and taking from the billions of dollars spent every year across ERP or single point solutions that we see it now. That throne is yet to be claimed. And the real question is, how can we find the right partners that would help us reach that faster? Thank you so much.
Thank you, Mustafa. I will bring the investors up, but just like last time, feel free to get started with questions.
I have just a couple questions to anchor us. Can you give me like a broad overview of what your typical customer looks like? Are we talking historically digitally native brands that are now realizing that DTC is a mirage and the only way they're going to make money is to go into wholesale? Are we talking legacy brands? Like what's what do the brands look like? And if there's some commonality around size or sophistication or industry, something like that, like help us just kind of wrap our heads around that.
Yeah, so we're very vertically focused between retail, commerce, and logistics companies around the use cases with omni-channel operations, advanced e-commerce fulfillment, retail becoming a fulfillment hub, and basically an online part of the on the operation. So we've seen companies that come from D2C, and we have a few of these that owned their own fulfillment and did not own their own fulfillment, using order management and diverting these orders to different 3PL partners. And we've seen 3PL partners that are serving these D2C brands using our software to basically be able to cater to these companies without the need to build their own tech stack and integrations with sales channels and so on. And we've also seen omni-channel retailers that want to bring all of that in-house, so that they would have their own fulfillment, they would have their order management in different sales channels, activating retail stores to do the buy online, ship from store, and click and collect, and return in store, and all of that. So the common factor, we've seen it, is some sort of an e-commerce aspect and high volume throughput. So companies that have struggled with other systems being not scalable, or the number of orders that they can ship out of a single facility being sort of throttled because of the technology that they're using, and how it's not automating a lot of the pieces, and you have to do manual supervision and assignment of orders. So that really becomes the triggering pain point that you can come in. And the strategy that we're following is having single point of entry to the organization. So one organization would have maybe a pain point right now in enabling the retail stores with real-time inventory online. Another company with handling multiple channels at that time, or WMS being a challenge. So we land with one of these solutions. We don't sell it as, let me replace everything now. We just come in with one of the pain points that you currently have, and then we expand, which is exactly the same strategy that Rippling is doing. Single point of entry, and then account-based potential expansion revenue.
Yeah. Rippling though enters into an environment in which one individual at a company is having to control and attempt to negotiate rates with massive third parties. And so they're abstracting the rate negotiation. But which is like my understanding would be a fundamentally different business, but the compound aspect of it is the same. Are your partners then, your customers, are they like, where do you fit on the spectrum of the legacy ERPs like NetSuite? Are these companies not big enough to have NetSuite, or are you cross integrating with NetSuite? Because a lot of these, at least in the US, kind of the narrative right now is, if you're big enough to be on NetSuite, NetSuite's pretty dope, man. But it takes 18 months and like $3 million to integrate. And like most legacy DTC brands are scrambling to do that because they're just like, at the end of the day, not sophisticated enough to integrate. And so there's this like big power vacuum of where there could be a modern ERP for the mid-market. Is that where you're coming in? Or are you, I mean, this slide leads me to believe if you're ripping people off of NetSuite, that's pretty insane. So like where's the scope?
Yeah. So it's one, people have outgrown legacy ERP systems. NetSuite is fine if you have very simple, straightforward use cases and you're not scaling beyond that. And if you need to start doing some changes, or I need to change the picking methods, I need to integrate new sales channels, I need to have real-time inventory in some sort of case that is not supported right now. So these change requests would require massive spending through an implementation partner, which again is a non-user friendly platform at the end of the day. And we've seen some crazy screens, platforms that cost millions of dollars and to implement, and you have in the same screen like 10 buttons. What would the guy click? And they end up not using the platform and preferring to do things manually just to not mess up. So we've taken the basic sense of user experience, which has been lacking in B2B software for the past good 15 years. All the user experience innovation has happened in B2C, not in B2B. And we're applying that to the user in a way that people are feeling more confident to experiment, to interact. And applying these use cases as a configuration, you don't need to customize on omniful. Your use cases would be there because we're very vertically focused. We do not serve, let's say F&B companies or hospitality or manufacturing. We're very focused on retail, commerce, and logistics. So any use case that you would think of is going to be already there. You don't need to think about customization or what change request. The best practices are in front of you, and we're helping you figure out how to extract more of your business. So that is, I think, the major point why people are now shifting away from these softwares. And the ones that have tried single point solutions are having a different pain point with integrations, with the time delay that would happen, the integration risk that is being carried, paying for overlapping features and not using it in one of the platforms. So that vendor consolidation is there. So someone needs a hybrid between a cloud native solution and what ERPs used to provide as a value, which is everything is there. So this is where we're coming in as let's say a modern ERP, and we're head-to-head competing with either a single point solution or a legacy ERP system. And we integrate with them, by the way. So I would say 80% of our customers do have some sort of ERP. So we integrate on the finance basis, we integrate on sharing some tax-related things at the end of the cycle. But anything that requires real-time inventory operations or fulfillment or order management is going to be done on our system and managed as a source of truth.
Thanks, Mustafa. Happy to jump in from there. Congrats on all the progress. $1 million in 7 months. Really impressive growth. So well done.
Thank you.
To pull on the thread from Travis a little bit more, we've looked at a handful of these modern ERP platforms in the States. I don't know if they're expanding to the Middle East, but want to get your take on them. I think, knowing it's a really big prize if you can win this market, knowing a lot of legacy solutions are not the same standards you mentioned that we're used to as software today. I wanted to hear if you've seen any of the modern ERP solutions expanding to this region, and if so, what you think of them from a competitive perspective.
So more or less, you would find companies focused more on a single point solution, and they've added maybe some additional modules. And from a marketing perspective, is being positioned as a more comprehensive platform. But if you dig deeper, there are a lot of pieces missing. And either they are a legacy system that is just dressed up as a cloud native company. And when you start the implementation process, you find the same exact experience that you've run away from the likes of Oracle or SAP. And of course, there would be a lot of competition. And we've starting to see companies that have been single point solutions for 7-8 years start to expand into more, I would say, horizontal pieces to cover up the remaining parts. So the competition is going to grow if it's not there already. And from day one, we've been competing globally. So we started selling in Saudi Arabia and UAE initially through our network, and it's because we were going founder-led sales, so we needed to find the closer customers. And from day one, we're competing with companies in the US, companies in Europe, Australia, India. So that was never a question of a localized market opportunity only. We're already being challenged, and in many cases have won deals from companies that have generated hundreds of millions of dollars as a cloud native, or even billions in the cases of Manhattan and Oracle and so on. So it really is about finding the right fit of a customer. We're not serving SMEs at the moment. Maybe with a few products we might, but at the moment we're very focused on mid-market to enterprise companies that are struggling right now with scaling up the order fulfillment. They want to go live fast. They want to get out of a misery. And this has never been clearer to us with every demo that we go in. It's not a question of do we have this pain point or no. It's more about how can we really make sure this is going to work for us because we have this pain point. So the market is massive. I'm not saying we're going to be the only one doing this globally, definitely not. But what we're trying to to say that we've been able to build this faster than almost everyone else. And with more AI, with more collaboration tools, with more software is being built faster now. If we're trying to build this, let's say 5-7 years back, it would have taken a lot more time and a lot more resources. And we've done that with an incredibly small team of engineers, which is something we're very proud of. And we're trying to build in the right momentum in the right way, without just raising billions of dollars and just going massive. We're making it in a way that we are going to remain lean, but still be a massive platform.
Ramy, Naseem, did you want to get any questions in? We're pretty much at time, but we could go for another 2 minutes or so here.
No, I'm good. Thank you. Everyone covered what I had in mind, so I'm all set. Thank you. This was great, Mustafa.
No, all I'm
so
gonna
much.
say is honestly, it's an amazing vision, man. Like you're literally trying to upend ERP, which is awesome. Congrats on all you've done.
So
today.
one point on this, we're actually not the ones that are trying to do it. It's happening. We're just trying to be there to catch the price, basically. This is already happening, whether we want it or not.
Awesome. Thank you, Mustafa.
Thank you. Thank you, guys.
Dunya, you are up. You're going to bring us home and close out the event strong.
Yes, I will. 1 second. Okay, can you guys see my screen?
Yes.
Okay, hi everyone. I'm Dunya Bashiti. I'm a co-founder at Capifly, and at Capifly, we're building MENA's institutional venture lending platform. A big part of a founder's role is to secure financing to fuel the growth of his or her company. And currently, the options provided are limited to equity financing, which happens to be the most expensive form of capital. It's dilutive and it's time-consuming. If you think deeper about this problem, you realize it's a double-sided one, because it's also a problem for capital providers, as they lack access to venture opportunities, the ability to assess those opportunities and execute on them. Here's where we come in. To solve this problem for both founders as well as investors, we've created a platform and a marketplace to help connect premium growing tech startups to sophisticated institutional investors. Our process is streamlined, structured, and takes no more than 3 weeks from application to receiving the cash. With the technology that we built, we seamlessly integrate into the startup's data sources. We analyze their growth metrics and issue a credit score based on which we provide them with the facility. Initially, our focus was on software and SaaS, and now we've expanded to finance a variety of virtual sectors, from light asset marketplaces to content and gaming. And with the MENA's virtual market at 15 billion and growing, the opportunity is really huge. Prior to 2019, venture debt did not exist in the MENA region, and now it has grown by 50-fold since its levels in 2020. And what sets us apart from current market players is the velocity of execution, mainly driven by our technology, which enables fast, unbiased, data-driven decision-making, our deep understanding of startup metrics and needs, and our innovative Sharia-first compliant approach. We're still early in our journey, but we're growing strongly. So far, we've deployed more than 2 million across 18 transactions in Saudi, UAE, Egypt, and Jordan, with 100% repayment rate and an average of 17% murabaha margin or interest rate. We've already closed our pre-seed round from regional investors, a $1 million round. And this has really translated into exponential growth. Over the past 12 months, our month-on-month average growth has been 29%. We've deployed three times more this year. This is mainly due to the trust that we built with the startups and the investors, and also with the increasing demand. The journey ahead is really exciting. We believe that this is the era for blended financing, and now that we've validated our model, the aim is to accelerate the deployment of venture debt by offering our infrastructure to other capital providers interested in alternative financing around the world. We've assembled the right team for this journey. Together, we have more than 30 years of experience in investments and in building technology. And currently, we're raising a $3 million round, basically to double down on our technology and our credit scoring engine, to expand in terms of market and to get the right regulatory framework in place. And that's it. Thank you very much for listening, and happy to answer any questions.
Thank you. That was great. If I could start us off, I have two questions. One, I want to just make sure I understand what the platform is actually doing. So you're not necessarily matchmaking between the institutional investor and the startup, but you're actually facilitating the transaction and managing the money directly. Did I understand that correctly?
True. So we provide different services. So we do actual deployment and collection. It depends really on the capital provider if they want origination or screening and underwriting, execution, collection. It really depends on where they need us, but we do it from origination all down to execution and monitoring.
And is there any like regulatory compliance wrapped around that, or how do you keep that all kind of clean and operating properly?
So it's the most common question that we get. So currently we operate out of Delaware, and we do the lending from an offshore to an offshore company, because as you know, all the startups has an offshore account, whether in Cayman or BVI, and in Delaware there's no like regulatory requirements to do that. But in the region we should be licensed. So currently we've applied to the Capital Market Authority in Riyadh in Saudi Arabia for an investment management license, and part of the fundraising will go to be able to get that license. Also, we've applied for a Category 3 license in UAE. We want to make sure that we're at least licensed in the main regions and main cities or countries in MENA.
Got it. Okay. And then when the business grows up, does it exit into does it get acquired by one of the institutional investors, or where does it go when it exits?
Sorry, capifly.
So who buys you? Who buys you when you grow up?
I think there's so many potential exit strategies. So one, it would be one of the banks, because Saudi is situated to become the hub for the technology ecosystem, and there should be something like Silicon Valley Bank in Saudi. So I think somebody in Saudi will acquire us to be able to underwrite and credit score startups in the region, or somebody like PFG or Stride that wants access to the MENA startups, wants somebody on the ground that can actually generate the pipeline for them. So it's so many different options, but I envision myself being like Capifly being acquired by a bank, to be honest.
Okay, got it. And then if you could just say a little bit more about the credit scoring, the algorithm and the framework, and how that flexes across sector, because a CPG company is going to have different dynamics than a technology company when it comes to that credit score, right?
Absolutely. So this is really where our strength is and where the IP is. So we don't do anything but virtual. So it has to be a technology company. There's two vetting stages. There's an initial vetting stage, which everything happens online. The first eligibility check happens within 2 minutes. You would know if you're eligible or not. Just making sure that you're VC backed, your post-product market fit, you have at least $250,000 in annualized revenue. And by the way, all the startups that has pitched today are excellent candidates, so feel free to reach out. The concentration of revenue is not very high. They have at least 4 to 6 months of runway, so we're not a last-minute resort of financing. We want to be part of their strategic financial planning, whether it's for working capital or growth. That's on the first. And then if they're eligible, then they move to the second part, which is also online, is the integration part, where we collect 2 sets of data, mainly transactional data and financial data. So we connect into Stripe, PayPal, QuickBooks, Zoho, whatever ERP system they're using. And then and this is like we import a lot of data, 100,000 rows of invoices, and clean the data and make sense out of it. and put them into brackets. So the main 4 or 5 brackets we look into is unit economics, so LTV over CAC payback period, gross profit. And for, as you said, for every sector, so SaaS is different than light asset marketplaces, it's different than gaming. There's different benchmarks, and then you can see where you're good, where you're great, where you're outstanding, and where you're deficient, and different weights is given to different. So as we said, unit economics, and then you have growth, you have retention and engagement, and efficiency of spending. So burn multiple, how much are you burning for every incremental dollar in revenue? And also the financial position. So what's the debt to valuation? What's the debt to equity ratio? And how much months in runway do you have? And then based on that credit score, the discount rate or the murabaha margin is agreed. I hope this answered your...
That's helpful. No, it's great. Yeah, super helpful. Okay, great. Thank you. I appreciate it.
Thank you very much.
Happy to jump in real quick. Thanks for running through this. Given some of the ups and downs of this space in the US, I'm curious to hear what some of the lessons are for you from CapChase, Pipe, some of the other companies that have been working in this world, at least from the US. What are some of the takeaways there?
So I've had a lot of discussions with so many people, especially like with PFG, and people would start with peer-to-peer lending and then move into the model where they offer their infrastructure as a capital, as a service kind of model. But we found out that the model that's been working really is the CapChase model, where you get a line of credit from big capital providers. Like big banks who want to access, especially in our region, banks are really focused on the corporate 10% of the economy, and there's the 90% SMEs that does not really have access to banking. And I think out of those SMEs, focusing on technology is key, because these technology startups will end up becoming those big corporates. And if you're not there at the beginning, and if you don't and the way you assess those companies is completely different from conventional businesses. So if you're not there from the beginning, if you don't understand the metrics, if you don't know what makes this company, because if you go to an ordinary bank, if they look at the companies that I finance, which I find very successful, they will think I'm crazy. The EBITDA is negative, there's no assets, no collateral, so what am I really doing? But I understand that this is done by design, because they're in a growth stage, so they're investing in growth. But when you go back to unit economics and shred the business, it should be a viable business. Do you think that the CapChase model is the model, or do you have any other insights on that?
Yeah, I think one of the challenges is just the rise in interest rates, and so being able to actually make margin. Let's say you are using that capital line business model. It's interesting to see Pipe. I mean, Pipe was a very hot company coming to the market, and they were building in the space. And I was just flipping through their website earlier. It seems like they're really focused on being more of an infrastructure layer. And so I think the benefit is there's probably some optionality, and maybe you guys will find more success in one model versus the other. But at least being early in the market, being able to see the growth there, being able to get access to capital to provide these facilities. I think it's an interesting space to be building in, but yeah, I've seen so many iterations of that model in the States, and so I'm glad you've tried to study that to figure out what's working and what hasn't.
I hope so. I hope that what applies in the States also applies here. So we're still early. We're gonna learn along the way, and we try to learn from others' mistakes and avoid them.
Smart.
Ramy, Travis, do you guys have any questions?
No questions. It's just an awesome vision for the entrepreneurship ecosystem. So really glad you're doing this.
Yeah, no questions. Other folks covered mine.
Maybe one thing, Dunya, from my end, just for clarification. Right now, you're setting up both, like you have a fund that you are deploying out of behind this, but then you're also building, as Riley mentioned, like an infrastructure layer that you will connect to other, like investors can connect through that to lending opportunities, right?
Yeah, so we have a financing vehicle in Delaware, and this was launched to prove that track record, because before talking to institutional investors, you need to show them that you've already deployed capital, that you have a defined default rate and a return structure. So we've structured a $10 million SPV that we've almost raised maybe 12 or 13% out of that fund, and we're continuously raising on to continue the momentum of deployment until we onboard institutional investors on the platform.
Got it. Cool. All right, Dunya. Well, thank you so much for sharing that and your vision. And yeah, with that, we're closing things out. So thank you to all of the founders who pitched, investors. Thank you so much for sharing your feedback with everyone. Yeah, really just want to say a huge thanks for everyone's time. I really enjoyed hearing the pitches and the feedback. Final thank you as well to SVB, Taft, and Intersect for supporting this events and other activities that we do here at Viaka. Send a follow-up email. We've recorded this event as well, so you can rewatch the pitches in there and sign up to become a member of the Viaka network. I think with that, let everyone go. Just a huge thank you.
Thank you. Bye-bye.
Thank you. This was great.
Thank you.
This was amazing.